Let's bring you the update now on the markets, and the first day of trade in this new week kicked off on a negative start. A global share index fell to a one-month low, while European stocks extended last week's drop. Meanwhile, tech firms led losses for Asian equities, and progress in the US-China delisting spat has helped to cushion Chinese stocks. Portfolio manager at Absa Asset Management is Carmen Mpelwane, and she's going to explain all of this to us, hopefully in simple language. Carmen, good morning to you. Let's start with the not-so-great start to the week's trade. What's expected from the global market activity today?
Yes, I think we definitely were feeling the remnants of Jackson Hole commentary on Friday. The US also overnight was down, but not as much as we saw towards the end of last week. As you've mentioned, China, a bit of a mixed bag this morning. However, we did see tech stocks slide as well. So I think this week is going to yield, what it should yield is probably based on the macro data that's coming out. So specifically European CPI, where there is concern that Germany has actually accelerated on the inflation side, whereas the outlook is that Spain may have actually started coming back in terms of inflation. We also are concerned around the energy crisis in Europe and the rhetoric around that and pricing. So that's something to keep an eye on. And then, as we well know, there's lots of macro data coming out of US and China as well through the week.
Yeah, let's talk about the key economic readings that are also expected this week, from China's PMI to US consumer confidence. What is the world market expecting there?
Yeah, so on the Chinese side, we do know there's been a significant concern around lockdown pressure, and that's been coming through. So the outlook for consensus is looking for 49.2 on that number. Slight increase from 49, but still contracting is below the 50 mark. On the US side, concern is around the consumer confidence. It is expected to increase to the level of 98 versus 95.7. So if it does come out that it's actually to the positive, that will give a bit of a tailwind.
All right, and the sound to you, Carmen, I'm not sure whether it is on my side, but let's see if we can get question 3 on. If it does deteriorate, we may have to cut this call short. So let's talk about the domestic front. The rand continuing to drop amid a strengthening dollar. Any hope of a turnaround in the currency performance?
That is highly unlikely to happen, I think, specifically because the Fed is starting its quantitative tightening this week. So we will see a significant reduction in the supply of the dollar. And I think that will have a huge impact on currencies aside from the dollar going forward. The dollar strength will remain. And therefore, I don't think we'll see any recovery in the rand. It is trading in a tight band at the moment, so that gives some sort of comfort at this point.
Yeah, let's talk a bit of company news, and you'll tell us how we should be reading the super groups financials, which are out.
Yeah, very, very strong numbers, specifically in a very, very tough market. Obviously, aside from the pandemic and what has come from that, Supergroup was definitely impacted by the supply chain issues that we've seen over the last 24 months, as well as the war in Ukraine. So what they have said is that they are looking to grow and gain market share through acquisitions, number one, and geographical expansion. There is definitely been a lot of a weakness in South Africa, but despite that, there's been very strong results, and we see the share price up over 3.5% this morning.
Let's conclude with Old Mutual reporting in its notice to shareholders on its unaudited interim results. How are they looking?
Yeah, I think the definite overriding factor for these results is going to be the dividends, which remain flat year on year. But I think market was expecting a increase in dividend, so that will definitely be a negative. As expected, we've seen a significant unwind in the provision for COVID mortality, and we expect that to continue into the second half of this year. But that's definitely a key characteristic or factor for all insurance companies. So it's largely well guided, but weak numbers, and we see a mutual opening up slightly down this morning.
Portfolio manager at Absa Asset Management is Carmen Mpelwane. Thank you very much for that markets update.